The markets have been worried about the trade war between the U.S. and China for several weeks now, and things got worse today. China announced new tariffs against U.S. goods this morning. That got the market off to a bad foot. And then there was a real curveball that they got in mid-morning from President Trump, who said not only is he going to respond in ways we don't know yet to the latest tariffs, but he made this sort of declaration that U.S. companies should look for alternatives to doing business with China. It's very broad. A lot of people are trying to figure out what this means and if he even has the authority to do so. Investors are not quite sure what the fallout's going to be. So they're selling stocks that would appear to be the most vulnerable to an escalation with the trade fight with China. This means companies like Apple. Apple's off pretty significantly today. They not only sell a lot of iPhones and other products there, they rely on Chinese goods. They make goods there. So if things get even worse between the U.S. and China for trade, a lot of companies like Apple are going to suffer. Well, if it keeps going the way it's going and both countries put more punitive taxes on goods that come into each other's countries, it's going to mean higher prices for people here in the States on all kinds of goods that come from China. That's clothing, electronics, things like that. For Chinese people, that's going to mean higher prices for goods that come from the U.S. The U.S. Has been a huge exporter of agricultural products, farm goods to China, soybeans, things like that. That has dropped off hugely. That's caused a lot of pain here in the U.S. Among farmers who are facing a lot of difficulty. What the business lobbies here in the States are less comfortable with is the kind of aggressive tactics that the administration is taking, basically raising taxes on goods that can hurt U.S. companies and consumers.